Hey all, welcome to Share Trek. This is Raj here, and friends, today I want to talk to you about Illumina because there is some news about Illumina which I think is pretty positive in my opinion, even though it sounds like a bitter pill for Illumina and its shareholders. Let's talk in detail about this. Let's get started. Welcome back, friends. Earlier this year, the European Commission imposed a 476 million fine on Illumina for acquiring Grail without obtaining regulatory approval. Illumina also has got FTC on its tail, and so both of these regulatory agencies are totally against Illumina acquiring Grail. Despite all this, Illumina has acquired Grail, and it has resulted in the share value of Illumina falling significantly. For this, the CEO has been punished. He resigned. The chairman of the board also lost his seat and had to resign. Activist shareholder Carl Icahn has put one of his nominees into the board, and he is very keen that this gets sold. A new CEO has come in who has got the confidence of both Carl Icahn as well as the rest of the stakeholders. So on Thursday, the European Commission made it clear that it will require Illumina to sell off Grail, making the next step in an ongoing antitrust case that has been causing difficulties for Illumina for quite a long time. I have already mentioned all the difficulties. This move was expected after European Union regulators blocked the $7.1 billion deal quite a while ago. And despite that, Illumina acquired Grail. In a press release, the European Commission stated that with today's decision, the committee is taking corrective actions, instructing Illumina to divest Grail and return the situation to its pre-acquisition state. I'll talk about very specific measures that the EU wants Illumina to take. The finalized divestment order is now being delivered to Illumina, outlining the divestment processes and transitional measures that are necessary in order to ensure that Grail remains as competitive as it was before the acquisition. And Illumina can choose from various divestment methods. EU Commission has given it a lot of flexibility, including a trade sale or a transaction in capital markets. But any chosen plan must be approved by the Commission so that it can be sure that Grail will survive. In addition to this challenge, Illumina also is facing legal battle with the Federal Trade Commission, as I mentioned earlier, and the ruling is expected in a very short period of time, maybe a few months from now. And Illumina has already committed to divest Grail if it loses either of this case with the FTC or with the European Union. This situation presents a significant challenge to Illumina's new CEO, Jacob Theissen, who has inherited Grail and its uncertain future in a crucial year for the company. So typically, I would say the first year would be a honeymoon period for the CEO. Right now, he enjoys the support of Carl Icahn as well as most of the stakeholders. That's how he got the job. Illumina has disclosed that it would have 12 months to divest Grail with a potential 3-month extension as a grace period, and that Illumina is currently reviewing the divestment order from the EU and deciding what to do. The EU order offers some flexibility to Illumina in the order to structure a deal that ensures viability and success of Grail post-divestment. For example, if Illumina chooses to divest Grail via capital market transaction, Illumina must capitalize Grail with 2.5 years of funding based on Grail's long-term plan. And I'm thinking that this is the kind of the order is kind of structured in such a manner that whatever Illumina does, Grail will succeed and it will go closer to the status it was before the acquisition. The order also calls for Illumina to retain a stake in Grail of up to 14.5%, which is the stake it had before acquiring the company, and also it has to re-establish a royalty agreement it had with Grail before the acquisition took place. So I think these are all the cornerstones of the proposed deal as per sources. Illumina could potentially offer shares of Grail to existing shareholders. This is my thoughts. They could do that, and they could also structure the issue of such equity share to existing shareholders of Illumina in a particular ratio that is more legitimate, and that would be more tax efficient for the shareholders as well as the company. It can allow the shareholders to decide whether they want to keep the Grail shares or sell the Grail shares, and this will be, I think, one of the options that Illumina would have for divesting Grail. And once Grail is divested, I expect Illumina share value to pick up. However, we'll still have the new CEO to appeal the decision with EU before such a divestiture takes place. So there is still some time. Until that time happens, the shares will stay depressed. And for example, PSEB now trades at 14x price to sales ratio, whereas Illumina is at 4.6x price to sales. That is because Grail is present in its balance sheet. Once Grail is divested, we should expect the multiples to go up. And some of the analysts are talking about Grail going as high as $200 after this. And friends, I'm going to show you Yahoo Finance stats, and you look at the income to shareholders from operations. It has deteriorated right from 2019 onwards to date and gone negative. So there has been incredible damage to the balance sheet. That will start improving, and along with that, Illumina will see higher value. Let me take you to the Yahoo sheet first. Here we are in Yahoo looking at the comparative. And on the top, we have the years, and TTM means the latest. And now, if you look at net income to common stockholders, you will see that in 2019, it was $1 billion, and then it dropped to 0.656 billion, and then it dropped to 0.762 billion in 2021. And in 2022, it went negative 4.4 billion. And right now, it's negative minus 4.18 billion. So there has been steady deterioration. And if you look at the stock price, it has fallen significantly. The EU fines were coming in anyway. EU fines have not yet been paid by Illumina. Illumina has said that they're going to request EU if they could keep a escrow account or a bond or something like that, and then actually pay the fine once the appeal fails. So that's the current situation. We have their earnings coming up on 9th of November 2023, and the EPS is expected to be 0.134 per share, and the revenue is expected to be 1.136 billion. So this is what the market is expecting. And I would like to take you to Simply Wall Street, where they have the price to sale multiple for Illumina, which is 4.6x, and they are being compared to companies like Agilent and also West Pharmaceutical Services. So this is a different league in which they are being compared. Now, if I was to show you what PSEB is valued at, let's go to valuation of PSEB. PSEB has a 14x valuation. It's at the top of the pile. And if Illumina were to divest Grail, and once Grail is out of the balance sheet, then Illumina's balance sheet is going to look very different. And I think their operational cost and their R&D cost, everything is going to change. And we will have a lot of positive numbers in the income to shareholders. And that will also give a positive flip. And also the price to sale ratio has to go up by much more significant multiples. And all of that might take it to $200 and above. That's my personal opinion. It's also justified by a few other analysts who are looking at it. And I think, you should do your own due diligence, but I'm going to look at whether I have some money available to buy a bunch of Illumina. I'm going to wait and see. I still have time. The market conditions are not very good for the valuation of Grail to be as lofty as it was before. And friends, this particular agreement that Grail had, if you look at my earlier videos on Illumina and Grail acquisition, I had mentioned in that the agreement that Illumina had entered into for acquiring Grail had a penalty clause that was going to be much higher than the penalty that EU imposed on Grail. And that was the logic that Grail, Illumina had in acquiring Grail, despite not having permissions from EU and FTC. So it was a very, very rock solid agreement. And there is a risk that if Illumina divests Grail, some of the remnants of that agreement might potentially get invoked, and there'll be further liabilities for Illumina. I'm not very clear about the exact details. I'm going to read the original agreement and try to come back to you with some information. I also requested Inf to have a look, Sandeep to have a look on the SEC declarations, and also on any further information that comes out between now and tomorrow. And tomorrow I'm going to be having a quick discussion with Sandeep, and we're going to record that, and I'll bring it back to you. So that's all for now, my friends, and I'll catch up with you again in the next video. And remember, these are all my personal opinion, not financial advice. Please do your due diligence before investing in Grail. Thanks and have a great day. Bye for now.